Hello, everyone. I'm so excited to welcome you to yet another promising session on the XAUUSD Live Technical Analysis. And in this session, we will be diving into an insightful analysis of a handful of financial instruments, which we are going to be deliberating on in a moment through a comprehensive price action perspective. And we are also going to be exploring the recent movement and chart patterns to uncover key insights that can potentially shape our trading decision ahead of the new week. And also on this note, I welcome you all once again, and let's confirm that we are good to go this morning before I dive into the business for today. So if you can see my screen and you can hear my voice clearly without distortion, kindly type in hi in the comment section so that I can confirm that we are all on the same page. So I would like to see some feedbacks in the comment section to confirm that we are good to go. Is the audio quality okay? Is the visuals very appropriate? So that if there is need for me to do some adjustment, I will be able to quickly do that before we kickstart. So let's see some comments, please. Let's see some response. Let's see some reactions. Let's see some involvement in the house, please. Okay, let's see what we have here. I'm trying to load up my comment section. Let me see. Oh, beautiful. So I can see Peteric, I can see Valeric, I can see 2213 0380 890 086 989 434 0079, and I can see people 0430 and Connie D32. Hey Carrie, how are you doing? All right, thank you very, very much. I think with these dozens of comments, I'm of the opinion that we are very good to go this morning. And let me introduce myself before we kickstart. My name is Sharif Daramola, and for the next 1 hour, I'm going to be your host as we delve into the financial market using technical parameters to identify trading opportunities. And for those who are joining us for the first time, you are highly welcome on board, and this is in fact the most appropriate time to join this XAUUSD live session. And what we simply do here on a daily basis is to come together as a community ahead of the New York session. So we are going to be choosing a random list of instruments at the beginning of the week like this. This is a Monday, so we are going to be choosing random pairs or instrument. It could be cryptocurrency, currency pairs, options, commodities, whichever case it may be. Just drop it in the comment section, and trust me, I will incorporate it into my plans for this week. And in fact, I also have a handful of interesting setups that I would love to share with you guys today. So this is what we do here, and on Tuesdays, Wednesdays, Thursdays, and Fridays, we come here to review how well the position we are in is doing, manage our existing trade, while we also look out for more opportunities ahead of the New York session. So this is simply what we do here. 10 a.m. UTC, 11 a.m. West African time on a daily basis. And it might look a little bit overwhelming at first since this is your first time, but trust me, if you continue to stay with us on a daily basis and you stay through the session, you will get to understand how this works, and you will eventually be able to use the information you have gathered here to make your independent decision on your own account. So with that being said here, let's dive right into the business for today. And you know how we do it. The first thing we are going to be doing here is to keep tabs with the fundamental aspect of the market by checking the economic calendar. And I cannot overemphasize the importance of checking the economic calendar, as these fundamental factors often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. So with that being said here, let's look at the economic calendar. And in fact, I was able to pull out a handful of high impact event, as this week is laced with a handful of high impact, both coming from the US docket, the UK docket, and even the Japanese docket too. And this week is filled with consumer price index from the US docket, GDP data from the UK docket, and we also have the most anticipated interest rate decision coming in from the US docket, and we have the FOMC. Hold on a second, let me scroll down a little bit so that we can see things here. We have the initial jobless claim, and then on Friday we have the Bank of Japan's interest rate decision also coming in, and we also have the consumer sentiment index coming from the US docket too as well. So you can see that we have this week laced with a handful of high impact event. And for today, Monday, June 12th, what we looked at here, we can see that there are no high impact event for today. So what I simply did was to recalibrate my priorities here to include the medium impact event, and when I did that, I was able to come up with a couple of events to look out for today. So in 3 hours from now, we have Dr. Catherine Mann speech will be coming up then, and she is a member of the Monetary Policy Committee of the Bank of England, and definitely majority in the market will want to look forward to this speech to have an insight into the nature of the monetary policies in the UK and what is likely we might be looking forward to during the week. Then in about 7 to 8 hours from now, we have the monthly budget statement, which is normally released by the Financial Management Services, and this summarizes the financial activities of federal entities, disbursing officers, and Federal Reserve banks. A positive budget statement that receipts exceed budgetary outlay is seen as bullish for the US dollar. On the other hand, a negative figure that indicates government debt is seen as bearish. And if you look at the previous data we have here, we have $176 billion, and then we have a general consensus projecting a minus 236 billion, which is more on the negative side here. So that means majority are expecting that we are going to be having a contraction in the previous month, the month of May, and this is not a good signal for the US dollar. So we are going to be looking forward to what the actual data is going to be. Will it be just as expected, below expectation, or even beyond expectation? So this is another data we are going to be looking forward to, which will be coming up in about 7 to 8 hours from now. So if you had been monitoring all the instruments, currency pairs, you will see that we have a fluctuation in a narrow range since the beginning of the week, and this is as a result of the high impact events that we are looking forward to this week. And so we could still see this range continue for a while before we start seeing significant moves. So we are going to be taking all this into consideration while we monitor price action. So let's dive right into the business with the information we have gathered here. So the first commodity we are going to be looking at this morning is going to be the US oil spot. So on the US oil spot, the first thing we are going to be doing here is to have an holistic view of what is really going on in this market by checking a higher time frame. And as a result of this one, I was able to come up with something on the 4 hours time frame. So this is what I was able to come up with on the 4 hours time frame. So what I did here was to take into consideration the nature of price movement in the last let's say in the last 6 to 7 weeks. That was since the beginning of the month of May. And one significant thing you will see on this chart is the fact that price action has been trapped within a range between the $74.50 level and the $67.50 zone to give us an insight into the level of indecision in this market. And as you can see how that area around the $74.50 level has been serving as a strong selling niche. As you can see, every attempt by the buyers to break out of the structure has been met with strong resistance from the sellers, and the same thing has also happened around the $67.50 level, as we saw here that every attempt by the sellers to break through the zone has been met with strong resistance from the buyers. So at this point in time, we all agree that it is quite indecisive at this point, and if we are going to be looking at this from a technical standpoint, for us to make an informed decision here, we would rather see price action break through the supply zone to give us an opportunity to buy, or the breakthrough of the demand zone to give us an opportunity to sell. And one more thing I would like to state here is that the situation we are seeing in the market currently has a whole lot of fundamental factors behind the scenes that has reflected on the chart with the situation we have here. Now, a couple of weeks ago, we had news from the Minister of Energy from the Saudi Arabian government, who was trying to warn traders not to short the US oil spot with the hopes that this would drive price to the upside. Unfortunately, that one failed. And during the last weekend, prior to the beginning of last week's trading session, we also had OPEC Plus meeting which came up, and there was a resolution that they're going to be cutting oil production by another 1 million barrels next month, and with the hopes that this will artificially increase the demand. But that one also failed, as we saw price action plunge to the downside throughout the course of last week. So with the situation we have here, this is what I was able to come up with from a technical standpoint to help us guide our trading activity for the week. So the first thing I did here was to identify a key level which is sitting just exactly around the $71 area. And one of the reasons why I have chosen this level is simply because of how this level had been a major determinant of price action since the beginning of the month of April. Now, if you look at the structure closely, you will see how this level had been a strong demand zone at one point. And then here in the second week of the month of May, we saw it serve as a selling niche here, a buy niche around this area. The same thing happened here before we saw the breakdown happen during the last trading day of last month. We saw price action climb up again this month, and you can see what happened here. Price action again has dropped below the $71 area. So you will see that whenever price action comes into this level, we see how it determines if the buyers or sellers is going to take over the market. And in addition to this key level is this trend line here, which has been supporting bullish momentum in the last couple of weeks as we saw higher lows. And not until this morning, we just witnessed a breakdown of this bullish trend line to incite a bearish signal in this market. Now, the question we are going to be asking right now is that will this breakdown turn out to be a true breakdown that will incite a sell-off in the market, where price could probably come back to retest structure to incite a bearish momentum to the downside? Or will the breakdown coming back into the demand zone here be a platform that will send price skyrocketing to the upside? So these are things that we are going to be looking at, and in order to have a better perspective into what is really going on around this area, we would want to scale down into a much more lower time frame. And as a result of that, we are going to be scaling down into the 1 hour time frame, where we want to see how participants in this market has been reacting to this current market structure since the beginning of this week. And this was what I was able to come up with on the 1 hour time frame. And let me talk about this channel first of all, before I talk about how price action has been reacting to the structure. So we had a flat channel where you know how we do it. Whenever we have a flat channel like this, we want to see price action either break out of the flat channel for buying opportunity or breakdown of the support line for selling opportunities. And what we saw at the beginning of the week was a bearish gap. As you can see, price action closed last week at around the hold on a second, around the $70.42 area. This was where price action closed last week, and we saw how the new week here started at around the $70.10 level. So we had a bearish gap here between this area to emphasize that there was a voluminous trading activity during the course of the weekend, which tended towards a bearish move. And at the beginning of the week, I saw here how price action was ranging initially between the $70.10 area, which is the highest point price action has been for this week, and we have the support line for the week sitting at the $69.30 level. And you know how we do it whenever we have this kind of flat channel. We want to wait patiently for price action to give us a signal, which will either come in the form of a breakout of the resistance line of the channel to give us an opportunity to buy, or the breakdown of the support line of the channel to give us an opportunity to sell. And if you look at what has been happening in this market in the last 4 hours, we finally saw the breakdown of the support line, which must have triggered a sell position at this point. But personally, on my own end, I missed out on that opportunity, as this happened during the early hours. Before I got into the chart, the position has already been broken to the downside. So I needed to wait and patiently for a new structure to mature. And for those who are taking advantage of the bearish momentum at the breakdown of the $69.30 level, well done to you for catching up with that opportunity. So you want to be moving your stop loss at this point to secure the current sell position while we continue to monitor price action. Now, for those who had missed out on that opportunity just like me, well, what do we want to be looking out for to be part of any potential trading opportunity today? Well, one of the first thing I was able to do here is to acknowledge the fact that it has been broken. And you all know that from a technical standpoint, whenever price action breaks down a key level like this, we expect that one point in time price is likely going to come back, retest that structure to incite another wave to the downside. Then in addition to this expectation is a bearish trend line, which I was able to spot here after connecting the series of lower highs, and this went to as far as Friday of last week's trading session to give us a beautiful bearish trend line, which we are going to be using to guide our trading activity for today. So right now, with the situation we have here, that is the breakdown of the $69.30 level. For those who had missed out on this opportunity, we want to remain patient. We don't want to jump in front of a moving trend right now. Let's wait for new structures to mature, and one of the structures we are looking forward to is for price action to retest the $69.30 or even come into this trend line. But most importantly, what we want to be seeing here to confirm that we should get ready to be part of the trend continuation to the downside is to start seeing selling pressure. And what we are going to be doing as soon as price comes into the zone is to scale down into a much more lower time frame, like our 10 minutes, 5 minutes, 3 minutes, or even 15 minutes time frame, to look out for multiple rejection, that is selling pressure, showing us that buyers are finding it difficult to break out of the trend line or even break above the $69.30 level to give us an opportunity to sell. So if we are going to be seeing something like a reversal pattern, like a double top structure right below the structures, below the $69.30 or even below the trend line, then we are going to be joining a bearish move to the downside. So this bearish trend line is going to be a major determinant of price action for today. So what this simply means is that if price action continues to trade below the trend line, we'll feel comfortable in our sell positions while we also look out for more opportunities to sell. However, if at any point in time price action breaks out of that trend line and then we start seeing buy pressure above the trend line, then at this point we want to start considering buying the US All Spot. So let's finish the details of selling at this point. Then another thing I would like to call our attention to here, that is, if this breakdown does not incite a retracement back into the structure, there is another way that we can also use to maximize the bearish potential in this market. So it could happen that price action could fall into a range where price continues to range within this area, where a breakdown of the support line of that range will transition into a trend continuation pattern to incite another wave of bearish momentum to the downside. So these are the ways we are going to be looking out for selling opportunities in this current market. And one thing for sure is mark out that trend line that we just identified on your chart so that we can have it visually represented and use it as a yardstick to guide any trend continuation to the downside. Then another thing I would like to buttress here is the lowest point price action has been for this week, which is situated at the $67.80 level. So we want to mark this level out too, as well, as we are going to be using it as a guide for trading activities going forward. So what this simply means is that if price action breaks down the $67.80 area, we want to be getting ready to sell. If we stay selling pressure below the structure on our lower time frame, will further confirm the strength of the sellers in this market. So these are structures we are going to be using to guide any selling momentum in this market for today. So with the bearish expectation duly explained, you know how we do it here. We also want to keep tabs with the potentials that buyers too can also come into this market. And if we are going to be buying this market at this point, what do we want to see on this chart that will give us an idea or give us or insight the decision to change our buyers from bearish to bullish? Now, for us to buy the US Oil Spot for today, I want to see price action break out of the trend line to the upside. At this point, seeing a breakout of this trend line is likely going to give us a signal that the trend line may no longer have the capacity to continue to negate any bullish momentum. I doubt if this is going to be happening today, but if it does happen, we want to always be on standby to catch that opportunity. And remember that we are not going to be excited at the breakout of that trend line, as we still need further confirmation that will give us the confidence to be part of a bullish move. So after the breakout of this trend line happens, we want to see price action drop back into the trend line, something like this, then continue by pressure above the structure to give us an opportunity to buy the US Oil Spot. And if it leads into a situation where price action breaks out of the $70.10 level, that is the resistance line for the week, which happens to be at the highest point price action has been for this week, then definitely we want to be adding more position to our existing trade. So that is how we are going to be trading the US Oil Spot for today. All we just need to do is mark the structures out on our chart so that we can have a visual representation of what to look out for whenever price action reaches these zones. So these are my views here on the US Oil Spot. If you have any questions whatsoever regarding what I just explained, feel free to let me know in the comment section, and trust me, I am willing and here to be of help in that regard. So I will be checking the comment section to see if there are any questions before I move on to the next pair. So I have 2616, good morning, thank you very much. Ellen 1972, good morning to you. 238, good morning. 2655, good morning to you. 876, thank you very much for checking in. So with that being said, let's dive right into the next option for today. And the next option we are going to be looking at is the USTech100 as usual. So what is really going on the USTech100 chart? So the first thing we are going to be doing here is to have an holistic perspective into what is going on. And to do that, we want to scale up into the 4 hours time frame. So on the 4 hours time frame, I've been able to identify a simple setup which we are going to be using to guide our trading activity for this week. Now, one thing here is that if you take into consideration what has been happening in this market since the beginning of the month of May, you will see here that price action has been very, very bullish in this market. And to further emphasize the strength of the buyers here, let's connect a series of higher lows. And if we do that correctly, we should be having a beautiful trend line which has been supporting this bullish momentum since the beginning of the week. So I would like to make this a little bit thicker so that it will emphasize its importance within this market structure. So back into our line chart, so you can see our price action had consistently respected this trend line. So at this point in time, we might likely see a situation where price will come back into the trend line to probably respect it or even break it to the downside. And why have I said so? Well, if we zoom into the current structure, that is taking into consideration what has been happening in this market in the last couple of weeks now, you will see that price action has been ranging caught within the $14,670 level and the $14,250 area to give us a $400 range, as you can see here. And one thing that is prominent about this whole structure is the fact that as soon as price action got into the 14,670 level at the beginning of this month, we continue to see how sellers have been negating all attempt by the buyers to break out of that structure. Look at what happened here. We saw sharp rejections of this level here. That was on the 5th of June, we saw sharp rejections. We saw here again on the 7th of June, we saw another sharp rejection of that zone. And right here again, during the later part of last week, we saw another sharp rejection, giving us a shooting star candle, which from a technical standpoint is a sign that reveals the presence of sellers around that area. So at this point in time, there is a high chance that we could likely see price action drop to the downside here, as buyers still find it difficult to break out of that resistance line. So it now depends if price drops to the downside into the 14,250 level, a level which has been a strong demand zone since the beginning of this month, I think in the last couple of weeks. Now, depending on how price action reacts to this level will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So a breakdown of the structure might likely incite a bearish move, while a continued buy pressure above this area, probably a double bottom structure, a reversal pattern, could incite another wave of bullish momentum. But at this point in time, our center of focus is simply going to be around this area, where we want to see how participants in this market has been reacting to the zone since the beginning of this week to decide what our next line of action will be. And are we going to be seeing a breakout of the 14,670 today to incite another wave of bullish momentum, or will the selling pressure continues to plunge price to the downside? So this will be revealed when we scale down to a much more lower time frame. Now, to understand what has been going on since the beginning of this week, we want to scale down into the 1 hour time frame, and this was what I was able to come up with on the 1 hour time frame. So the first thing here is that since Thursday of last week's trading session, it is quite clear that price action has been bullish before it culminated at that resistance line at the 14,670. Now, to emphasize or reveal the presence of buyers in this market, we connected a series of higher lows to give us this bullish trend line that we are going to be using to guide our trading activity for today. And so what this simply means is that as long as price action remains above this trend line, we'll feel comfortable buying the USTech100, while we also look out for more opportunities to buy. But if at any point in time price action breaches this trend line, that is breaking it to the downside, then at this point we will start considering selling the USTech100. Now, with the trend line marked out on the chart right now, the next thing I did here was to try to decipher what majority in the market has been doing. And from what I saw here during the first 10 hours to 12 hours in this market, we can see how price action was ranging between the 14,595 and the 14,545 to reveal the level of indecision in this market, and not until the breakout of the 14,595 happened, which signaled the potential that buyers could likely push price to the upside. So I had a buy position triggered at that point with a stop loss order sitting right below the previous low, right below the bullish trend line, to see if this momentum will hold going into the New York session today. So what this simply means is that we shall feel comfortable in the buy position, but the most important thing here is the breakout of the 14,670 that will further give validity to this bullish momentum in this market. So a breakout of the 14,670 is that's structure we are looking forward to feel very, very confident in this buy position. So let's see how price action plays out going forward from this current structure. So above the 14,595, we are looking forward to more buying opportunities in the market, and a further breakout of the 14,670 will be welcoming more opportunities to buy the USTech100. And you know how we do it here. Even though we are looking out for more opportunities to buy here, we always want to keep in mind that sellers still have a potential to as well. So looking at the current market structure here, what do we want to see on this chart that will make us change our bias from bullish to bearish? Now, considering what we have seen so far around the 14,670 and the 14,620 area, which has been a strong selling niche since the beginning of this month, it is quite clear that we are still within the seller's territory. And when we are within the seller's territory, we cannot ignore the potentials that sellers could still take over this market. And what do we want to see on this chart that will make us change our bias? Well, like I said earlier, we want to see price action break below the trend line, which will be the first time price will be breaking down the trend line in the last 48 trading hours. Then if the breakdown happens, then at this point we want to start considering selling. Remember, we are not getting too excited. This is a very strong bullish momentum since the second half of last week, so we will need a confirmation that sellers are gradually gaining momentum, and to do that we want to scale down into our lower time frame, your 10 minutes, 5 or 15 minutes time frame, to look out for a retest of structure. That is a retest of the trend line, which would have been broken rather, or the retest of the 14,595, where we start seeing signs that buyers are finding it difficult to climb back above that trend line. When this happens, we begin to see something like selling pressure or possibly a reversal pattern on our lower time frame to join a bearish move to the downside. Then if this happens, we want to have another sell stop order below the 14,545, where the breakdown retest of that area will further confirm the strength of the sellers in this market. So this is how we are going to be taking advantage of sell positions or buy positions in this market, and you can see how the trend line here is going to be serving a major role in determining how we are going to be taking a position for today. So you want to mark these levels out on your chart and use it as a guide in taking advantage of any trading opportunity at this point. So let's see how price action plays out, and we shall be coming back here tomorrow to make a well-informed decision on what our next line of action will be. So if you have any questions regarding my explanation on the USTech100, feel free to let me know in the comment section. If you need me to do some clarification or shed more light in a particular aspect you don't understand, let me know in the comment section, and trust me, I am willing to be of help in that regard. So in the absence of no questions, I want to take another 5 seconds to see if there will be any questions before I move on to the next pair. All right, so in the absence of no questions, let's move on to the next instrument. So the next instrument I'm going to be taking today is going to be the XAUUSD. And on the XAUUSD, I have a quite interesting position running right now. So let's quickly run through how we got to this point. So the first thing we normally do is to ensure that we check things from an holistic point of view to have an idea of what is really going on in this market. And to do that, I was able to find something on the 4 hours time frame, which we are going to be using to guide our trading activity for today. So looking at the 4 hours time frame, what I did here was to take into consideration the activity of price action since the beginning of last month. And when you do that correctly, you will see here that price action has been bearish. Look, since we have lower highs here, you can see that price action has been showing signs that sellers are trying to push price to the downside. And in fact, I have a couple of trend lines here to emphasize the strength, the character of sellers in this market. So I have one trend line here, and then I have another trend line here, which as price action has been respecting till the end of last week's trading session. Then I have another one here, the third one here, which was broken a couple of times during the course of last week's trading session. So in addition to this trend line here is a simple flat channel, which you can see here. If we take a closer look at the structure, you will see that since the mid-month of May, price action has been within a range between the 1,985 and the $1,935 area to give us an insight into the level of indecision in this market. But one thing that has, though when we look at this from a technical standpoint, you would first of all want to say it's a bearish momentum. But one thing that negates the idea that this is a bearish momentum is the fact that sellers have been finding it difficult to break through the $1,940 level. And this has been happening in the last couple of weeks here, as all attempt by the sellers to find new lows has been negated by buyers at every point in time, as you can see here, hereby giving us a demand zone to work with. And considering the fact that price remains above a demand zone, it is quite reasonable to look out for buying opportunity. Then in addition to that is this key zone here between the 1,965 and the 1,960, which will be our yardstick to guide trading activity for this week. And the reason why I have identified this zone is simply because of how price action has been reacting to the zone since the mid-month of May. You can see what happened here. This area was a strong demand zone during the second week of May. We saw it here again. It was a demand zone before we saw the breakdown retest of the structure of the zone again here. We saw some choppy situation around this area. Then we saw the breakdown happen here at the beginning of the week of this month rather. We saw a significant breakdown, and since the significant breakdown happened at the beginning of the month, we saw how that zone has been a strong selling niche, hereby negating all attempt by the buyers to break out of that structure. And this went on to exist into the last week here, as you can see. And one thing for sure here is that we already have a key zone that we are going to be using to guide our trading activity for this week. Now, it depends on how price action reacts to the zone during the first half of this week that will determine how we are going to be positioning ourselves for this week. And in order for us to be able to identify how participant in this market has been reacting to the zone, we would want to scale down into a much more lower time frame to see what the price movement has transitioned to in terms of technical patterns. Now, when we scale down into the 1 hour time frame, this is what I was able to come up with this morning. So let's zoom things in a little bit and let's take into consideration the key level at the 1,960 level, as you can see here. Now, one thing I saw here this morning was that price action initially started on a bearish note. Remember, as we saw selling pressure begin this week around the $1,961.20 level, and this is the highest point price action has been for this week. So this is our resistance line for the week. That was the first resistance line for this week. Then we saw how price action dropped into this area around the $1,954.50 level, giving us the support line for the week, as this is the lowest point where price action has been for this week. Then we saw price come back into the resistance line. And you know how we do it whenever we have this kind of flat channel where price action is caught within a range. We want to wait patiently for price action to give us a signal to trade this commodity in the form of either a breakdown of the support line for selling opportunities or breakout of the resistance line for buying opportunities. So what I did here this morning was to place my buy stop order above the key level at the 1960 and my sell stop order below the support line at the 1954 to be part of any opportunities the market presents. And as you can see here, I already have a buy stop order triggered at this point at the breakout of both the 1960 and the $1,961.20 level. And if you are lucky enough to be part of this move, well done to you for being on standby to have caught that move. And if you took advantage of that opportunity, you will currently be running with about 58 to 60 pips in profit, which is not bad at all to start the week with. So at this point in time, you know how we do it. When we have price action move significantly well in our favor, the next thing you want to be doing is to move all stop losses to secure this current buy position, as anything could still happen. The week is still very young and we could still have price dropped back to the downside. So the most thing to do right now is to move all stop losses within the zone between the 1961.20 level and the 1960 area to secure the current buy position, while we also make sure that we give room for price action to breed, with the hopes that price will still retrace back to the downside to incite another wave of bullish momentum. Now, for those who had missed out on this opportunity, well, I would advise that you want to remain patient at this juncture. You don't want to jump into any to a moving trend right now. We want to remain patient for new structures to mature before jumping into any position. And one of the structures that will happen here, judging from a technical standpoint, that is after having a breakout of a key significant structure here, we have the key level broken, we have the resistance line at the 1961 broken to the upside, and also we have the trend line which we identified on the 4 hours time frame also broken to the upside. And you know that whenever we have this kind of breakouts of structures, there is still a chance that price action could still come back to do a retest of that structure, where the appearance of buy pressure above these levels or zone could incite another wave of bullish momentum. So with this scenario here, for those who had missed out on that buy position we had earlier, there is still a chance price could still come back into that zone. So let's keep in mind and wait out and see if we are going to be having a retest of this zone to incite another wave. But most importantly, what we are going to be looking out for around this area is buy pressure. That's signs that sellers are finding it difficult to trade below the 1960, and this will reflect on this chart as buy pressure or reversal patterns in the form of double bottom structures, head and shoulder patterns, or even falling wedge to be part of this move to the upside. So let's watch out and see if price will retrace into that area. Then another way to join a trend continuation to the upside if price action does not come back to retest structure is to identify a level above this area to join at the breakout of. Now, one thing that could still happen here if price does not drop to the downside is price could transition into a trend continuation pattern, where we'll first of all see a range happen around this area, where the breakout retest of the resistance of that range will incite another wave of buying opportunity. And for those who are already in the buy position, this will welcome more opportunities to add more position to our existing trade, hereby maximizing the potential of this bullish move. And for those who have not joined yet, then this is going to be an area you want to be positioning yourself to join a trend continuation to the upside. Now, to make things a little bit more easy around that area, we want to identify a level that we are going to be using to guide this move. And I think we have something around the 1965, which I identified on the 4 hours time frame. Let us go back to the 4 hours time frame here. So this is it right here. So I would like to let this show up on my 1 hour time frame so that we can put this, include this into our yardstick for trading activity today. So we have the 1965 level mapped out here. Okay. So we have the 1965 level mapped out, and hold on a second. So we really need to have things very precise here so that we can be able. So we have that level marked out. Then another level here we also want to take into consideration too is the $1,967.50 level, which has also been the highest point price action had been on a long time. So I would like to label this area for the sake of clarity, $1,967.50 level. So you want to be marking this out on your chart. So I will give this a blue color to differentiate it. No, I think I will give it a pink color to differentiate it from the previous levels we identified earlier. So let's give this a pink color. All right. So going back into our candle chart right now, so we have some other key levels that we are going to be using to guide our trading activity today. So for me, at this particular point in time, we might likely see price action go into a choppy situation, where I said price could likely transition into a trend continuation pattern, where we see probably price forms a bullish rectangular pattern where the breakout of the resistant line of that range may fall around the $1,967.50 level to incite the trend continuation to the upside. So this is how we are going to be joining the bullish momentum if price action does not drop back into the key zone at the 1,960. So this is the idea behind buying the XAUUSD for today. Now, in as much as we are looking out for buying opportunity, you know how we do it here. We also want to keep the options of selling the XAUUSD to open to as well. And if we are going to be keeping that open, what do we want to see on this chart that will make us want to be considering selling the gold spot? Now, for me to sell the gold spot, I would want to see price action drop. In fact, drop into the key level here and drop below that area where price will be back within the seller's territory, that is below the bearish trend line we identified on the 4 hours time frame. So if price action drops below this area, then the tendency of a selling opportunity becomes gradually increases. Now remember, we are not getting too excited to sell at that point, so we are not having a sell stop order in this case scenario. So what we are going to be doing is to remain patient to wait for structures to mature. And if we are going to be waiting for structures to mature, we are going to scale down into our lower time frame, where we want to look out for retest of structure. It's going to be the retest of the key level, retest of the 1,961, or even the trend line here. But the most important pattern we want to be seeing is continued selling pressure on our lower time frame, giving us signs that buyers are finding it difficult to climb back above this key level. And if that happens, we want to join a sell and then have a sell stop order below the 1,954.50 level to add more position to our existing trade. So this is how I'm going to be thinking of selling the XAUUSD for today. So we want to see price action break down, drop back below the seller's territory, below the bearish trend line, for us to be part of any move to the downside. So these are my views here on the XAUUSD for today. So we already have key structures to guide our trading activity. So ensure you mark these levels out on your chart so that you can have a visual representation on what to look out for a trading opportunity in this market. And for those who already have a buy position, I already told you that we want to be moving all stop losses to secure the current buy position. So that is that on the XAUUSD. If you have any questions, feel free to let me know in the comment section of this video you are watching right now. Okay. All right, so we're going to be moving on to, will I be able to treat 2 more pairs today because of the time I have right now? I have less than 10 minutes to end the session. So let's see what will happen. So let's go into the next instrument, which is the GBPUSD. So on the GBPUSD, I already have the buy position, which has been taken out right now after I moved my stop loss to my entry point before the live session. So we are going to be looking forward to see how I actually thought of buying at that point. So the first thing we are going to be doing is to scale up into the higher time frame, where we want to see things from an holistic point of view before we go into the details of what our expectations will be like for this week and for today. So right here on the 4 hours time frame, this is what I was able to come up with. And what I did here was to take into consideration the activity of price action in the last 2 to 3 weeks in this market. And what I was able to come up with was the fact that price action has been bullish. And to emphasize this momentum, we can see how price action has transitioned into an ascending channel here, where we had connected a series of higher highs and the higher lows to give us the simple structure. And this has guided the bullish momentum so far the last couple of weeks. And in addition to that ascending channel, here are a couple of levels. I have one at the 1.2470 area, which was initially a selling niche for about 2 weeks before the breakout of the structure happened at the beginning of this month, as you can see here. Then the second one happened last week's trading session to signal the strength of the buyers here. Then another structure was broken to the upside last week around the 1.2540 level, as you can see here, to emphasize the strength of the buyers. And since then, price action had continued to find higher highs. But one thing for sure happened here last week when we saw price action culminate at the 1.25900 area, as you can see here. That was on Friday to give us a sharp rejection of that level. And what this simply tells us is that there are sellers present around this area where participants are thinking that the pounds have gotten to a peak where there is a need to start doing some profit-taking activity, which might likely result into a retracement into the support line of the ascending channel, probably to incite another wave of bullish momentum, or even break down the support line to incite a sell-off in this market. So what we are going to be doing right now is to scale down into a much more lower time frame, like the 1 hour time frame, where we want to see how participants in this market has been reacting to the 1.25900 area, which happens to be our key level for this week. And you know how we use our key levels in this community. What we want to see here to buy is to see price action break above our key level for an opportunity to buy the GBPUSD, as a breakout retest will confirm a trend continuation, while continued selling pressure below the key level is likely going to incite a sell-off that might likely come back into the support line of the ascending channel we identified earlier. So let's scale down into the 1 hour time frame so that we can see how participants in this market has been reacting to this particular level. So scaling down into the 1 hour time frame, this is what I was able to come up with this morning. So let's zoom into price actions activity since the beginning of this week. So I was able to identify a range. Initially, we had this situation where price action was ranging between the 1.25850 and the 1.25650 area to emphasize the level of indecision at the beginning of the week. And this move could be connected to the high impact event that we are looking forward to this week. Remember, I shared with you in the beginning of the session that we are looking forward to a handful of macroeconomic events coming from all the major economies, the Japanese, the Europe, and the UK, and also the US economies. And this has resulted in this choppy situation we saw at the beginning of the week. And you know how we do it whenever we have this kind of flat channel where price action ranges between a range. We want to wait patiently for structures to mature where a breakout of the resistance line will give us an opportunity to buy, while the breakdown of the support line will give us an opportunity to sell. And with a buy stop order above the 1.25850, I initially had a buy stop triggered where price action moved over 14-15 pips in my favor, and after moving my stop losses to secure the position, I was taken out at break even, as you can see here. Now, going into the New York session today, how do we intend to trade this? Is this going to turn out to be this candle is still about 59 minutes old, so we still have about a minute 50 seconds for this candle to close. So we cannot jump into conclusion yet, as it could still turn out to be a hammer candle, which from a technical standpoint reveals the presence of buyers around this area. So we are going to wait and see how this candle will close. And another thing I would like us to do here is to identify a trend line that we are going to be using to guide our trading activity for this week. So if we bring out our line chart here, we should have something like this to work with. So I have this trend line, which we shall be using. So I will make this a little bit more lighter and then bring back the candle chart to make some little adjustment to the structure. So we have a beautiful trend line to work with for this week. Now, you know how we use our trend lines. So with this kind of situation we have here, I would like to give this a red color, or let's give it a green color to emphasize, to differentiate it from the other trend lines we have here. So as long as price action remains above the trend line, we want to feel comfortable in our buy position, while we also look out for more buying opportunities to take advantage of the bullish momentum in this market. So if price remains above the trend line, we continue to look out for buying opportunity. So with the breakout of the 1.25850 that we saw a couple of hours ago, will this turn out to be something like a retest of structure, whereby pressure along this area will incite another wave of bullish momentum? So let's wait for that one to happen to be part of a bullish momentum here. But if at any point in time price action breaks down the trend line, breaches the trend line, then this will be the first time price action will be breaking this trend line in the last couple of days. And if the breakdown of this trend line happens, remember, we are not getting too excited here, as we still need some confirmations to happen before we join any bearish move. And to do that, we want to scale down into our lower time frame, where we shall be looking out for a retest of the trend line or the 1.25850 to give us a signal that sellers are gradually gaining momentum. And this will also be a sign that buyers are finding it difficult to climb back above the trend line and our key level at the 1.25900 level. Then we join this move to the downside, having a sell stop order below the 1.25650 to maximize the potential of this bearish move. Then we also have a key level at the 1.254 to add more position if price action ever goes there to break down that structure to the downside. So these are my views here on the GBPUSD. So as we can see here, price action has already broken down the trend line, so we'll still need some confirmations to happen. So we are going to be scaling down into a much more lower time frame. So for the sake of this session, let's scale down into the 50 minutes time frame and see what to look out for here to be part of a bearish move. Now, if I bring out my line chart here, there is a level here which I already cited just by looking at this chart. From afar, I was able to see this level around the 1.2580 level. What a strong psychological area that is, considering the round figure of that price. So we have the 1.25800 level figured out here. So we shall label this and mark this out on our chart so that we can use it as a reference point when we are about to make our independent decision. So we have something like this. So we are going to be looking forward to a retest of that level. So let's see how price action plays with the structure. So we already have a breakdown. Now we want to see a couple of retests of structure, giving us signs that buyers are finding it difficult to climb above this level. Then at this point, we want to be part of a bearish move to the downside. Then in addition to this one, we have a trend line also here on the 50 minutes time frame we want to be using to guide our trading activity. So here we are. We have a trend line also here, and it appears price has already broken down the trend line. Another good signal. So let's look out for retest of structure, continued selling pressure. We want to see signs that buyers are finding it difficult to break back above the 1.258 to be part of a bearish move to the downside. That is that on the GBPUSD for today. And if you have any questions regarding what I just explained so far, feel free to let me know in the comment section. And I think it's on this note I'm going to be calling it a day here. We were not able to treat as much as possible. I think we were able to treat the USOILSPOT, the USTech100, the XAUUSD, and of course the GBPUSD. So we were able to take on 4 financial instruments for today. I think this is quite enough for us to have a wider range of opportunities to take advantage of during the New York session today. So I hope we'll be on standby to catch any of these opportunities. I do hope you mark your levels out on your chart, and if you want to, screenshot your screen so that you can use it as a reference point as we get prepared for the New York session. And one thing I would like to state here is that today is the first trading day of the week. The week is still very, very early, and there is a tendency that there could be some slow movement in price action, and this normally leads into compulsive decisions, which we don't want to fall into at this point. That is why we have our levels marked out, and we want to wait for structures to mature before joining any potential move. And another thing we want to take into consideration is the fact that we have a series of very strong economic data coming in later in the week, which majority in the market will be anticipating, and we are going to be seeing the reflection of this anticipation on the chart as price action moving within a range. So there's a tendency for range-bound trading activity, so let's keep this in mind while we continue to monitor price action. So it's on this note I want to wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this instrument has been doing and also get ready for the New York session tomorrow. And for the newcomers in the house, I hope you are able to gain one or two things from what we are able to share here. But trust me, be patient. It will take some time for you to acclimatize with our style of trading in this community. And if you do, you will be on a high road to success on this one. So be patient with us. Continue to be with part of the live session as we continue to monitor price action throughout the week. Do have a wonderful and beautiful evening, everyone. Bye-bye.